Well, despite the rise in average FICO scores, many borrowers may still find themselves being denied credit cards or loans this year. On this Money Monday, joining us with this astute expertise is Howard Dvorkin, chairman of Debt.com. And he joined us last week, and we were talking about the lessons learned in 2020, which, a lot of people, they were home all the time, so they weren't going out spending their money. They actually got to pay down some of their credit cards, which brought their scores up. But I don't get it. Why don't they get more credit if their credit history is better?
Well, the fact of the matter is their credit history may be better because they have less debt, but there's other things going on. During the pandemic, lots of people lost their jobs. So changes in employment is a negative for lenders. Basically, out-of-date credit reports you got to watch out for. Also, insufficient income. Remember, if you're out of a job, you're not making money. So all of a sudden, your income drops and it takes you a while to get back on your feet. So lenders right now are scared. They don't know what is going on. From all accounts, things should be fine long term, but it's the short term, and they are frightened to death of giving money out to people that may not be able to pay it back.
I see. But another piece of advice that you gave last week was rather than renting, people should look to buying their own home. But of course, they will most likely need a loan in order to do that. And if loans aren't being handed out, how do they accomplish home ownership? What is your advice to consumers who are kind of stuck in that spot?
Well, the first thing people should do is make sure your bills are paid and up to date. There's also a little trick. If you did miss some payments and you didn't call your lenders during the pandemic, you can put a statement on your credit report. Not to say that all lenders even look at what's written, but there is the ability for you to put a statement saying, hey, I got this virus, I was laid off, during this time, and this is what happens. So it might need a little explaining to do, but frankly, lenders are more sympathetic right now, but you just have to pay those bills constantly. And if you don't, you're going to get yourself in trouble.
Right. Is there a magic number that one should try to attain before they even apply for a home loan? Because once you start applying, then it's going to ding your credit that way if you're not approved. But is there a certain number or percentage that one should maybe have in their coffers before they even attempt home ownership?
I mean, certainly you should have cash available because you need to make a down payment, which is going to show stability. Also, you need to make sure that your payments are consistent. And if they're not, then you're going to have to explain that. But the number with regards to a credit rating, if your credit rating and your FICO score is in the 600s, that's going to be challenging for you to get a loan by virtually anybody. And you also have to be careful that you're not so driven to take any loan and allow a lender to overcharge you for the privilege of borrowing their money, because that could have massive effects down the road.
I see. But interest rates now, they're great for people who kind of have all their ducks in a row and are ready to make that leap. Do you know, from what you're hearing in the finance sector, how much longer we're going to be seeing a new chairwoman at the Federal Reserve? So are we going to see interest rates going up anytime soon with the new administration? What do you suspect?
I don't think the administration can dictate that. The Federal Reserve is an independent group. However, they are cognizant of the challenges in this economy, and I would not be surprised to see these interest rates extend out for the next year, maybe year and a half. At the same time, the earlier you secure a mortgage, the better off you are, so don't wait around. Also, there is a very limited supply in certain parts of this country of properties to purchase. So your choices may be reduced. So, you have time. You do have time, but don't take too much time if you're planning on buying a house.
Okay, so the three things that people should start doing since we're in the month of January, starting out a brand new year, what would be three top things that people should focus on their finances to get themselves into a better place?
The first thing is pull your credit report, see what it looks like. And you can pull a free credit report, go to freecreditreport.com and just they'll download you your credit report from all three credit bureaus. That's the first thing. Make sure that your bills are being paid timely. If you have excessive credit card balances, try to get some help. Figure out a plan to reduce those credit card bills and start being smart. Stop using your credit cards for normal purchases. Or if you have to use your credit cards, it's okay, or a debit card, but just make sure when that bill comes in that it's paid off at the end of the month in full.
Okay, and you mentioned credit reports. What's a locked credit report?
A locked credit report is when it's really a protection item, which essentially doesn't allow anybody to access your credit report because you may have had fraud in the past and you have to unlock or give the credit bureau permission to unlock the credit report. And really it's a good thing. I mean, there are a lot of people out there that are not doing the right thing and committing fraud.
Right.
And people have to
Protect
protect
yourself.
themselves all the time.
Absolutely. Howard, thank you so much. Excellent advice once again.
Thank
We'll,
you.
we'll check in with you again soon. Take
Thanks
care.
so much. Happy New Year.
Happy New Year. We're back after this.